Hello, my name's David Miller. I'm the manager of Nexus Global Solutions Portfolio and the co-manager of Dynamic. I'm speaking to you from the United Kingdom of Great Britain and Northern Ireland, still a member of the EU, in early November. Well, October was a rather indifferent month for investors. Solutions was down about 1.5%, Dynamic 1.6%. Year to date though, the numbers remain good, with Solutions up 11.8 and Dynamic 16.1%. So all in all, 10 months in, this has been a really good year for investors. Good returns have been made, and the two portfolios have participated well in those rising markets. So what's the new news since I last reported to you? Well, we've had a cut in US interest rates, another cut, 0.25%, expected but very welcome nonetheless. Less expected, we actually had a Brexit deal for a while, but that's now been superseded by the calling of a general election in the UK on the 12th of December. So we're back to uncertainty again. We've had good company results, which I'll talk about more in a moment, but it's very encouraging when the corporate world is delivering profits growth and dividends growth, because that's what we're interested in really, not the politics. On top of that, something again that was not really expected, the tensions between the US and China, so far as trade are concerned, they've eased off a bit. There's talk of a partial deal being signed quite soon. When things are less bad than they're expected to be, markets react positively. It doesn't have to be absolutely great news, it just has to be less bad news. And I think that's really what's been going on, particularly in the latter part of the month. That's when markets recovered and we were part of that recovery. On asset allocation, Dynamic is 97% invested in global equities now, 3% in cash. Solutions, the more broadly based portfolio, has that mix between fixed interest, cash, equities and alternatives. Very little changed in recent months because that's not really been where the action is. If we'd made any changes in asset allocation recently, we've added a little bit to UK equities, which have been looking cheap because of Brexit uncertainty. Now to the companies, that's the core of both portfolios. And as I said, we've had the results season, so we can actually see what the companies have been achieving and what they think about the future. Comes along every 3 months, but always very useful. In the US, the biggest economy, the biggest market, the technology companies that we have held for some time now, delivering 20 to 30% sales growth. Hard not to like something like that. They might get a bad press, but they're delivering the earnings growth, and that's what we're attracted by. The pharmaceutical companies, despite political attacks, again delivering double-digit growth and dividends. A number of the financials have done well as well. In Europe, again, the same picture, good companies and bad companies, and as active stock pickers, we're trying to buy the good ones. And then remarkably, given all the uncertainty about Brexit, the UK had a good month. Investments like Prudential, Legal & General, Lloyds, all up substantially in the month when the market as a whole was down a fraction. And we've had a takeover. Sophos, the internet security company, is leaving us for private equity in the US. It's been fun while it lasted and we've made a good profit. I think that's the message I really want to give you, is that although the headlines talk about lack of growth, possible recession, political strife, at the end of the day, there are companies out there that are able to make a profit. They are able to deliver growth to investors in a world where growth is in short supply, and that's increasingly attractive. So, what next? Any moment now it'll be 2020. The forecasters are sharpening their pencils right now with predictions for a very unpredictable year to come. What I would say is that for now, the fact we've got moderate economic growth, low inflation, low interest rates, that's a very firm foundation against which to make investment decisions. There will be winners and there will be losers, but it was ever thus. And our view is that we can work hard to select those quality companies in liquid markets. We can see how the world develops and we can change the plan accordingly. but that's how we're starting things at the moment. So that's it for this month. One more report this year in early December. I look forward to doing that, and I hope you found this review of the last month of use. Thank you.